Rezolve AI is currently trading at $2.55, reflecting a closing figure from the last active session on Friday, March 20th, 2026, as the market is currently closed today, Sunday, March 22nd, 2026. The stock saw a slight intraday dip of about 0.89% during that final session of the week, oscillating between a high of $2.59 and a low of $2.46. While a $2.50 price point might make this look like just another speculative play in the software sector, there is a massive gap between the market's current valuation of this company and the fundamental trajectory it is mapped out for the next 12 months. Most investors look at a $2.55 price tag and see a struggling small cap, but the reality is that Rezolve AI just closed a massive $250 million financing round and is guiding for $350 million in revenue for 2026. That is nearly 10 times their previous yearly output. When you see a company trading at these levels while simultaneously forecasting a $500 million annual recurring revenue exit rate by the end of the year, you have to ask yourself if the market is actually paying attention or if it's just stuck in a lag. The expectation for Rezolve AI, especially among those using the Robinhood app or looking for investment help on various online investing sites, was that the company would remain a niche player in the AI search space. People expected a slow, methodical crawl toward profitability. Instead, the reality we are seeing is an aggressive, high-speed land grab. They didn't just meet expectations, they shattered the narrative by reporting their first profitable month in December 2025, right as they were crossing the $200 million annual recurring revenue mark. This wasn't a fluke. It was the result of their brain suite moving from pilot programs into full-scale production-grade deployments with global giants like Adidas, Burberry, and H&M. While the general public is still trying to figure out if AI can write a decent email, Rezolve has quietly positioned itself as the underlying transaction layer for what they call Agentic Commerce. If you look at the recent stock movement, it's clear that institutional activity is starting to pick up, even if the retail side is still a bit hesitant. We saw a high-volume session on Friday with over 17 million shares changing hands. That's significantly above the average daily volume, suggesting that big players are starting to move into positions following the successful $250 million capital raise. Typically, when a company raises that much cash, you expect heavy dilution and a falling share price. However, Rezolve managed to close this oversubscribed financing with institutional confidence that hasn't been seen in many of its peers. They are entering the middle of 2026 with one of the strongest balance sheets in the AI commerce sector, which gives them the firepower to go on an acquisition spree. We already saw them do this with the Reward Loyalty acquisition, which added $90 million in EBITDA accretive revenue almost overnight. The common ground here is that everyone knows AI is the future, but the deeper contrarian take is that the search and click model of the internet is actually dying. Rezolve is betting that you won't go to a website to buy shoes in 2 years. You'll just tell an AI agent what you want, and the transaction will happen in the background. This is where their partnership with Microsoft and Google becomes the real driver. These aren't just logos on a slide. Google Cloud is actively distributing the Brain Suite, and they expect their sales channels to generate over 50% of Rezolve's revenue in the coming years. When you have the world's biggest tech companies acting as your sales force, your cost of customer acquisition plummets. This is the operating leverage that allowed them to hit profitability much sooner than the smart money predicted. For those of you who manage your own portfolios through self-investing or use tools like the Fidelity mobile app to track your positions, it's worth noting that Rezolve's volatility is currently through the roof. The options market is pricing in moves of nearly 15 to 20% over the next few weeks. This is a high-stakes environment where the tension between the current $850 million market cap and the projected $500 million recurring revenue creates a massive opportunity for a re-rating. If they even get close to a 10x revenue multiple, which is standard for high-growth SaaS tech in the AI space, the current price looks like a total anomaly. However, the market is still punishing them for being a former SPAC and for the general skepticism surrounding small-cap AI stocks. Comment below how many shares of Rezolve AI you currently hold, or if you think the recent acquisition of Reward Loyalty was a smart move for their bottom line. The business model here is fundamentally about the transition from conversational AI to transactional AI. Most AI tools today are chatty, but they can't actually do anything. You can ask a chatbot for travel advice, but it can't book the flight, pay for it, and send the confirmation to your phone in one go. Rezolute's Brain Suite is designed to be the brain that handles the discovery, the pricing, the availability, and the actual checkout. They are targeting the $30 trillion global retail market by providing the infrastructure that allows any retailer to have an agentic presence. Instead of building their own AI from scratch, these retailers just plug into Rezolute. This is why their customer list looks like a directory of the Fortune 500. They aren't selling a dream, they're selling a utility that is already processing billions of API calls. Looking at the older reports, Rezolute had some rocky periods during its initial public listing phase. Like many companies that entered the market via a business combination, it faced significant headwinds as the initial hype wore off and investors demanded actual revenue. In 2024 and 2025, the stock was languishing near its 52-week lows of $1.07. But the pivot happened when they proved the technology worked at scale in the Latin American market, specifically with groups like Gap and Banana Republic in Mexico. They showed that when you move from traditional search to conversational engagement, the conversion rates don't just go up by a few percent, they often double or triple. That data is what finally convinced the big institutions to step in with the $250 million investment we saw earlier this year. The future outlook for Rezolute is tied directly to their ability to execute on this $350 million revenue guidance. If they hit that number, the current share price of $2.55 will likely be a distant memory. The catalysts to watch are the upcoming quarterly earnings calls, where we will see if the reward loyalty integration is delivering the promised EBITDA. We also need to keep a close eye on the expansion of their partnership with Microsoft. If Rezolute becomes the default commerce engine for Copilot, the scale would be unprecedented. However, the risks are real. Competition in the AI space is fierce, and while Rezolute has a head start in agentic commerce, they are fighting for budget against every other software platform out there. There is also the risk of macroeconomic pressure slowing down retail spending, which could delay some of their enterprise rollouts. For the individual investor using an individual brokerage account or the Robinhood stock trading platform, this is a classic case of expectation versus reality. The expectation is that this is a small, risky AI play. The reality is a company with $250 million in the bank, growing at 10x year over year, and partnered with the largest tech entities on the planet. The tension between these 2 points is usually where the profit is made. If you are looking for investment help or comparing this to other investing sites, you'll find that few companies have this kind of revenue to valuation gap. It requires a certain level of comfort with volatility, but the fundamental shift towards agentic commerce is not a trend that is going away. In summary, Rezolve AI is at a massive inflection point. We are looking at a stock that is technically cheap based on its future guidance, but it's being treated with the caution typically reserved for unproven startups. The $250 million cash infusion and the $350 million revenue target for 2026 are the real story here. The company has moved past the experimental phase and is now in the execution phase. If they can maintain this momentum and hit that $500 million ARR exit run rate by December, the only question that matters. The contrast between the current market skepticism and the operational reality is stark. As they continue to announce live deployments and hit their financial targets, the market will eventually have to bridge that gap. We started at $2.55, and while the day-to-day fluctuations can be distracting, the long-term thesis is built on a fundamental change in how the world buys and sells things. Would you like me to analyze the institutional ownership levels for Rezolve AI to see which major funds have been increasing their positions lately? Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.